keep it going with commodities now, and Goldman Sachs expects oil prices to average $76 a barrel in 2025 based on a moderate crude surplus and spare capacity among major producers, with concerns easing over a potential disruption in Iranian supply. The investment bank said there is a possibility that prices could rise towards year-end, as it seems that Brent time spreads underpricing physical tightness somewhat. Additionally, they believe the geopolitical risk premium is limited for oil, as Israel-Iran tensions have not impacted supply from the region as well.
Alright, then let's keep it going with important commentary bright and early this morning, and let's take a look at commentary coming in from the IMF then, because the IMF has flagged the risk rising geopolitical risks and weak long-term growth prospects for the globe as well. IMF now expects inflation to fall to 3.5% on an annualized basis by the end of next year versus the average 5.8% in 2024 as well. And in their World Economic Outlook, the IMF also said that it believes the battle against inflation is almost won, even as it called for a policy pivot. And the fund kept its global growth estimate at 3.2% for this year and 2025, which it called stable yet underwhelming at this point. Additionally, they also have lowered outlook for other advanced economies, notably the largest European nations, as well as several emerging markets, blaming intensifying global conflicts and ensuing risks to commodity prices as well. So that's the latest update when it comes to the IMF then.
Okay, let's move on, shifting focus to more important commentary from the ECB chief Christine Lagarde, who believes inflation in the Eurozone region will ease to 2% faster than expected, supporting the case for further rate cuts from the central bank. Sounding extremely optimistic, she said that she is confident of scaling a sustainable course in 2025. Still, she argued that caution was warranted and the ECB was not yet in the position to declare victory.
Moving on to what's brewing at Starbucks, because shares of global coffee giant Starbucks slid after the company posted a decline in sales in the fourth quarter. Chief Brian Niccol highlights the need for a shift in business strategy. The company's same-store sales slid for the third consecutive quarter, fueled by a 10% tumble in traffic to its North American stores. They also raised the quarterly dividend to provide some certainty to investors as it tries to turn around the business as well.
Well, on the flip side, General Motors has given investors something to cheer about after the automaker raised its guidance for a third time this year, in addition to easily beating third quarter revenue and profit expectations. For the quarter gone by, the company has posted an over 10% surge in revenues, and shares of the automaker soared 8% in early hours.
Moving on then, and shifting focus to some corporate action as well, HSBC has unveiled a major overhaul, announcing a new geographic setup, consolidated operations and a new CFO, the lender's first female finance chief. This is the second heavyweight leadership shake-up for HSBC in recent months as well. Additionally, newly appointed history-making new chief financial officer Pam Kaur is a battle-hardened risk and audit veteran. Remember, she's the first woman to occupy the role in the bank's 160-year history.
Okay, well, and it seems to be trouble for McDonald's, because shares of global fast food giant witnessed steep declines after the Centers for Disease Control and Prevention said an E. coli outbreak linked to the company's Quarter Pounder burgers has led to 10 hospitalizations and also one death. The agency said 49 cases have been reported in 10 states between the 27th of September and 11th of October.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits, and then break right through them. Become something more. It's my time to rise.